Hello, welcome back to Learn Oikonomia. Here in this video, we are starting with the methods of measuring national income. In this video particularly, we will be doing the product method. We are concentrating on the product method, which is also known as the output method of measuring national income. In this table, if you look into the third column, you can see that what are the measure or what are the aspects which are taken for measuring the output of product method. Here we have to take into consideration agriculture, forestry and fishery, energy and water, manufacturing, construction, service and distribution, total domestic product, adjustment for financial services, GDP at factor cost, residual error, GDP at factor cost from expenditure. So all these things would be taken into considered when you measure national income by using the product method. So these are actually just for understanding a hypothetical economy at current prices. Both GDP and GNB are looked into in this table. These are just for your information. We have three different methods, and different aspects are taken for the three methods. The aspect taken for the first method is not counted in the second method or third method. So just to make you understand about these things, this table is given. That's all. Okay. So the most direct method of arriving at an estimate of a country's national output or national income is to add the output figures of all the firms in the economy to get the total value of the national output. The outputs can be grouped into certain product categories corresponding to industries or sectors. So we all know that we have different sectors in the economy. We have primary sector, secondary sector and the tertiary sector. Under primary sector, we have agriculture and allied services. The secondary sector would cover manufacturing, industries, farms, all. And then tertiary sector would take into consideration the service sector. What are the problems here? When we use the output approach, there is a major problem which is known as a problem of double counting. It arises due to the fact that an industry's output is often used as an input of another industries. That means that if agriculture is producing some output, it is used as the input in the manufacturing industry for producing some other goods. If and all this is not only with respect to the agriculture sector and the industrial sector, but this is common to all the sectors. The problem of double counting is a very big issue when we take into consideration the measurement of national income by using the product method. This is why when we add up the values of all the sales, the same output is counted again and again as it is sold by one firm to another. This problem is avoided by using the concept known as value added, which is the difference between the output value and input value at every stage of production. In other words, each firm's value added is the value of its output minus value of its input that it purchases from other firms. If you take into consideration an automobile manufacturing company, the automobile manufacturing company's value added is the value of its output minus value of its input. Input would include tires, tubes, glass, batteries, etc., which the industry or the company buys from other firms, as also the value of other inputs such as electricity, fuel, etc., it purchases from other firms. If you look into the words of Lutzi, you can see that a firm's output is defined as its value added. The sum of all values added must be the value at factor cost of all goods and services produced by the economy. While referring to the concept of value added, economists draw a distinction between intermediate goods and final goods. You have to understand the difference between intermediate goods and final goods. Final goods is the final output, and intermediate goods are those raw materials which are used for the production of the final good. So if you count both intermediate goods and final output, then you will be counting the output multiple times, because the output is made by using the raw materials which are produced by various sectors. So in many cases you can see this. As a result, counting, double counting and multiple counting would be done here, which would be a problem. And in our example, tires, tubes, glass, steel, electricity were all intermediate goods used at various stages of the production process, while cars are the final goods. In fact, all investment products used at various stages of production lead to the production of car, which is the final output. In short, we can see that the output approach measures the national output, which is known as a gross domestic product, in terms of values added by each sectors in the economy. To avoid the problem of double counting or multiple counting, we must either use the value added method, or we have to count the total value of all the final products. If you look into the case of exports, you can see that the value added method of estimating national output, if you use in the case of export, we have to include export but exclude important materials and services. Imports are automatically excluded since we only record the value added in this country. So we know that exports are those items which are produced in our country and we send to other countries, and imports are those items which are produced by some other country and we buy this product when it is arrived in our country. Now, this will give us the GDP, and in general, the GDP is measured at market prices, giving the market value of all the final output. We have seen the difference between market price and factor cost. So, when there is market price, we have to add the net indirect taxes, and to this we must add the net factor property. That is it. Now, what about the income from abroad? How can we consider income from abroad in the case of output method? What is gross national product? It is the name that we give to the total rupee value for the final goods and services which are produced within a nation during a given year. It is a figure one arrives at when one applies a measuring rod of money to diverse goods and services, from computer games to machine tools, so that a country produces with its land, labor, capital, resources, and this equals the sum of money values of all consumption as well as investment goods. Government purchases will be taken into consideration as well as net exports will be taken into consideration. GNP is used for all purposes, or it can be used for various purposes. That is something we have to understand. It can be used for different purposes, but the most important one is to measure the overall performance of an economy. The gross domestic product, or GDP, it is considered to be a comprehensive measure of nation's total output of goods as well as services. It is a sum of dollar values of consumption, gross investment, government purchases, and net exports, which is happening within the nation during a given year. So that's all we have discussed, the product method or the outlay method or the output method of measuring national income. I hope you understand. But here the major problem is the problem of double counting, and you have to solve this problem if you are going for the product method or the outlay method of measuring the national income. Please like, share and subscribe to this channel, and also I welcome you to my Telegram group and Telegram channel to discuss your doubts, and thank you for watching.